Hello, everyone, and welcome to my presentation today. I'm Lindsey, owner and CEO of Hawkeye Traders. I'm going to teach you today on the concept of market direction using volume and price. Market direction means you're trying to determine where the market's going to go. Ideal. I want to make sure that everyone knows that we are here for educational purposes only, that trading in futures, forex, stock, and options markets may not be appropriate for all traders. There's a substantial amount of reward available, but there's also a very large amount of risk. You must be aware of the risk involved. Make sure that you don't trade beyond your means. Make sure you never trade in a live account until you've first proven you can consistently trade in a simulated account. And no representation is being made that anything we show you today is going to make you money. Want to make sure that you understand that past performance is not indicative of future results. Any other questions? You've got a copy of this disclaimer. Today I'm going to cover the importance and introduce you to volume and why volume is so important in the markets. A lot of people, especially in the Forex market, discount volume because they don't believe there's really any true volume in Forex. While that is true, there is no centralized exchange in the Forex market. There is volume data that is available and that is crucial to making informed trade decisions. And so I'm going to be showing you today a lot of really good examples of how volume can point to directional intent of the market and help you as a trader to make wise decisions which are based upon the actual instrument that the institutions use, and that is volume. Okay, I'm going to show you why the opening price principle is so important. I'm going to go through what volume price analysis is. I'm going to give you lots of examples from live market of what using volume can do for you and to help you to point into the direction of the market. And I'm also going to be giving you a special offer at the end of my presentation today to help you to apply volume in the ways that I'm showing you. And always make sure you ask lots of questions, and I'm here to help you to answer those questions. So to start off, I just want to tell you that between 70 to 80% of traders are failing. In the market that we've seen today, in a very long extended bull market, not as many, you're probably down more on the 70% side, but there's still going to be retail traders out there who are going to be duped into the institutions' traps, and they're going to be on the wrong side of the market. So want to make sure that you understand that using traditional indicators and strategies are 80% of the reason why you've got 80% of traders that are failing. Not that these are bad, because a lot of people use these and they are very traditional and they have a long-standing record, but if 80% of people are using standard indicators and 80% are failing, there's got to be something there. There also has to be something missing. So I want to show you that volume is so important because volume really is the only leading indicator. It signals price movement before it happens. It gives you as a trader the market's intent. By comparison, all other indicators are lagging. Okay, when you see the examples I'll show you in a minute, you'll really see the harmony in trading with volume. But the key to understanding volume really comes in triple time frames. So by using multiple time frames, analyzing the longer term with the shorter term, it helps you to get a totally different view on the market. It gives you the edge. You're not trading the market, you're actually trading risk. And so what volume does, especially on triple time frames, is it lowers your risk to the point where you can say, yeah, I'm ready to take this trade. I'm ready to enter in this market. And that's the idea behind that. So me as a trader, back in the late 90s, I traded part-time. I was an engineer. I was working on doing things, but I traded part-time to make a little bit of extra money. I made pretty good money. I made enough to buy a house. I made enough to pay off all of my debt. But when the dot-com market came in 2000, I was so cocky. I was so used to always being right that I blew up several other accounts following that. My investment account went down 50%. I started getting scared and I started following every Tom, Dick, and Harry out there. I started losing confidence in myself. I almost gave up trading altogether because, okay, this just isn't working for me. I was very inconsistent in trading and I just never applied any rules. So because of that, I started to learn. And you know what they've said about losses, say, learn from your losses. You always learn valuable things from your losses. A lot of people don't really learn from their victories. They always learn from their losses. So I say, and you've heard this said many other times before, if you're going to lose, make sure you fail quickly, fail often, and don't fail to learn from your losses. Okay, so those are some key concepts to learn from that. And so from those things, I learned a lot of lessons about trading, time, price action, time of day trading, and so forth. And then about 2005, I was introduced to a company called Hawkeye Traders. Hawkeye Traders had a seminar that I signed up for, and I bought into the indicators because I saw there was something there that I was missing, but I didn't know exactly what. And I found out about trading with volume and price. I learned the relationship and the secrets that volume has to offer. And I also saw that volume really was the missing link that I needed to be able to be successful in the markets. I was able to get the trades, identify the trades, but volume really helped me to be consistently profitable. So volume is the key. And I want to go through and show you some different principles of why volume is so important and why volume is the key. So I want to introduce you to the opening price principle. Standard volume spread analysis does not consider the opening price. And so you're saying, okay, what is standard volume spread analysis? It's a simple way of looking at the volume distribution on a specific price bar, whether it's a minute bar, 5-minute bar, 15, 6-minute daily, whatever. You're looking at the overall distribution of volume over that price bar from the high to the low. And from that, you're able to do some analysis to determine where the majority of traders are lying. In the middle of the bar, the high of the bar, the lower of the bar, you find out where value range is, you find out where the point of control and so forth. So all of those things are part of the analysis. But without the opening price and not considering where the price is opened at, Hawkeye really considers that as the key, as an important part of that. It's paramount. Okay, it's similar to an auction where you've got an auctioneer standing up in front of a group of people holding up little cards, and they're wanting to sell something. So they open the price and says, okay, can I get a bid for $100 on this antique vase? And nobody raises their cards. And so can I get a bid of $80? Can I bid a bid of $60? Okay, we finally get someone raise their bid. $60. Okay, can I get 61? Can I get 60? And so forth. So the auction starts at $60. The price might go up to 60, 70, maybe even to $80, but the price is going to be limited to within a specific range of that opening price. However, if the price came in at $100 and someone automatically started bidding at $100, then the price may actually go all the way up to $120, $130, $150 before bidding is over. So starting price is very important, okay? It also sets the basis for the session. So understanding that is also important. So looking at a picture, if you can see volume spread analysis as this component right here, where you're looking at the overall spread, the distribution from the high to the low. If you take into account that distribution of price, where are all of the buyers, where are all the sellers, you see where the price actually opened, the extent of the high and low, and then where the price closed, then that gives you much more appreciation of the volume and the actual underlying intent. And so from this, you can see that the majority of the volume occurred under the opening price. So price was being pushed down, and it closed very near to the peak volume. So we can understand why volume on this case would be painted red, showing that there's a high degree of selling and the intent of the market is to go down. Okay, so it helps you to understand and to see that. So volume price analysis really is a culmination of over 20 years of research. It's more of a sophisticated way of trading, more like a forensic analysis than a technical analysis, because you're really looking for the fingerprint and you're looking for the feel of the market. It helps you to see trades more clearly. Volume price analysis helps you to perceive the charts, the actual structure of the market. It helps you to place your trades It helps you to see how to keep profits that you've made because you're actually seeing when volume is changing and it's starting to change the direction. So if it's starting to show signs it's going against the direction of your trade, that's a great place to either take profits or to get out of the trade. It also shows you how to protect any of your positions. So if you're looking at hedging, then it gives you that opportunity when you see these signs and signals. And so I want to transition over into some examples, and I want to show you quickly example of what we're looking at. Lorenzo, I went over what volume spread analysis was. It's basically the distribution of volume. It's a volume profile over any particular price bar. And so we're looking at analyzing this volume distribution over that price bar. And Oswald had said next to volume, technical and fundamental analysis are important, not only volume. Well, of course, yeah, volume really is the key though. It's the underlying principle. Technical fundamental analysis is very important. I agree, absolutely. So just looking at a very quick example chart I have pulled out here, I want to go through the 3 basic principles to look at. Looking at the opening, you can see there's a huge amount of opening volume that comes in. In this case, you can see that volume has been painted red, showing that there's a large amount of selling pressure coming in at the opening. And then you can see 1, 2, 3 price bars that went straight down following a large amount of opening volume. Once that was done, you can see the 3rd price bar was painted white. A white price bar is indicative of neutral distribution. So that means that there is an equal amount of aggressive buying and aggressive selling on the market. It's also a very large amount of it, so that means that there's a large participation in this market. But there's a large intent for selling, but there's also a large intent for buying at this level. So the market starts to trend right back up within the range of that opening. So the opening price defines the session times. Next, we see a bar that comes right back in as price trades back up into the high or the open of the session. You can see predominant selling coming in. You can see greater than average selling volume starting to come in and appear. This price bar is painted red because it is predominantly selling. And you can see by the structure of that price bar that you have the close less than the open, and the majority of volume is going to be occurring at the lower side or bottom of this bar. So this is a trap bar. It's trying to trap retail traders into the high of the day, fake breakout, and the price is going to come down really quick following that price move and try to trap people at the high of the day. All right, so when they're trying to protect this level because the institutions have already established short positions and they're protecting the price level in order to push the market down. So as you see the price start to drift off of this failed price breakout, you can see buying attempts are very small and muted. Any other attempts to try to rally back up right here, you can see are extremely low. You can see not only is it ultra low volume, but you can also see that it is neutral. There's not a lot of real aggressive buying going on. So when these sellers start to come back in, you start to see price responding positively. So this is called responsive price action. When selling activity is identified and price is responsive to that selling, that also is a key to help you to see the direction of the market. When you see that push move, it hasn't broken the low of the opening range yet, but it's showing you that the market is just so smooth in moving down, but is struggling to come back up. And anytime you start to see a correction or a move back up again, it's always just very weak and it doesn't have any gusto. And then when you see other signs that this market reversal isn't going to continue, well, when these price failures occur and you start to see responsive volume and price action entering again, that's when you know the market's going to start trending. So while we know and understand the keys, aggressive traders are getting short here. If you're a more conservative trader and you're trading risk and you're waiting for the trend to be established, and once the trend is established, volume is already sitting here telling you ahead of time that the intention is to go down. And when that does give you the initial break, gives you the initial entry point for your trade, then you've got a very nice smooth trending trade with low risk and high probability for profit. And that's the whole idea behind Hawkeye volume, is that it shows you the market intent. It helps you to understand price, and it helps you to understand the relationship that market direction has historically. So understanding these principles, responsive price action, trapped points, and the opening price will help you to become a much better trader. Okay, I won't go over into some live examples right now unless there are any other questions. Danny wants to know, do we have a live trading room calling out trades? And no, we do not at this point. Sorry about that. Let me pull up. If you let me know any symbols you'd like for me to look at or analyze, or any specific platforms, then I'll be starting off. I've got 4 different platforms set up to show you on these things. And I'll start off on the Forex market with the MT4. So looking at the current setups, I've got a couple of that are sitting here. This is the live edge of the market trading right now. If you look at the longer term setups, or if I go over to my longer chart, I want to look at the daily setup. If you can see a daily chart setup, you can see that right now we are on the cusp of a corrective move, which is in a downtrend. Larger trend is up, but you see we're on a corrective move with a move back up again. So you can see the structure of that has been defined on the daily. So if we go into a 4-hour chart, we can see that that same structure is here. So the shorter term 4-hour chart is showing that the market direction was defined by the intention right here. Volume, a price extension with opposing volume, showing that volume was attractive. That price was attractive here to buyers in the market, just like price right here was attractive to sellers in the market. A push up in volume right here, okay, was failed because we can see that the large amount of volume occurred as selling volume prior to that. So price came back up and tried to break out and did get some new highs, but you can see that there were no closes above that price. These were traps that were trying to trap retail traders into the highs of the days again. Price came back down really quickly, and then you started to see the large amount of selling and the accumulation of selling positions here. So they were, in this case, they were accumulating US dollars and they were selling Australian dollars, and then down the market came. You can also see from the pivot marks that you see here that these are accumulation distribution ranges. And then when you see the clusters of pivots in that region broken, then you know that you have started a new trend run. And then these are great, very low risk, high probability returns. And that's all you're doing. You're trading probabilities and you're trading risk. If you're trying to trade to make money, then you're going to lose. But if you're trying to manage and trade risk and trade with probabilities on your side, then you're going to do quite well. Okay. Are these tools available in Sierra charts? No, I'm sorry, they are not. So based upon this, then we can go down and go a little bit faster. So you can see that this short-term move down is simply again, a correction on a longer-term up move. And we're back to our 30-minute chart. So you can see based upon 30-minute, 15-minute, and 5-minute. And the 5-minute chart is the one you trade from if you're looking at the analysis of those. So looking at the setup of the 5-minute chart, you can see, lo and behold, volume again, even on the short-term up move, was telling you this is due for a correction. Volume starts turning red and showing you the intention of the market is to reverse. And so as this was prior, as this range was pushed back up and failed, we call this price action failure. This becomes either your aggressive entry point, or the break of your pivot low becomes your low risk entry point. And once you see that, then you start to trade that based upon corrective rules. Now, how long do you hold the trade? How long do you trade? Well, that's a whole nother science in of itself. But using volume will help you to see as a trader when the corrective move is over. So when you start to see buying volume coming in at extension lows, here the 15 minutes already starting to show you that there is an extension low with opposing volume coming in at a price point. Now we need to see the following bars coming in with buying volume. We also need to see that the downward trend is broken with aggressive buying volume. So those are 3 things we're going to be looking for, but this is the starting point. So we're starting to see that this is correct. And so if we were to look at our longer term trend then, right here, You can see that, yep, looks like we are right down to a trailing support. Okay, and so this is a region which could be supported and price could start to revert right back into the longer term trend. So if price does break through prior pivot low, well, then we start to establish a new low. Well, then this might have some real meat to it, and we might start seeing that the overall longer term trend direction of this short term might be in place. And this might be the pullback for a longer term big push move down. That might be signaled from this one right here. So this price came up, came down, comes right back up, checks, and then might be continuing on its move down. So I'm not trying to call those directions, but I'm telling you that volume helps you to see that and helps you to understand the structure of the market and understand the directional intent of these moves. So if you're an intraday trader, volume really will help you to see that trading in the direction of the longer term trend, and using the volume to help to see the direction of the trade will help you to take these profit targets. So if you were to see this as a break, then you're looking at this specific trade example, then you're looking for a potential 32, 40, there's 70 pip move right there. So 70 pips on Australian US dollar pair is a nice move. Okay, the recording will be available on Investor Inspiration's YouTube page, so be sure and get the recording of that there. Okay, yes, it is available on NinjaTrader. Let me pull my NinjaTrader application back up here. Okay, wrong screen. Let me show the one with volume on it. There we go. All right, here I've got the S&P 500 mini contract futures. I'm trading off of a 5-minute, a 15-minute, here's a 30-minute, and then hourly chart. So you can see the relationship between the three to help you to understand and to look at the values. You can see that coming up into the time frame here, okay, where we're looking at the volume at right about 5, 6 o'clock in the morning. You can see that price rallied up into a peak and then started selling. And then you can see price came right back down, dropped into prior accumulation ranges, okay? And then if you look at that compared to the longer time frame, you can see that that same alignment came in right here about the same time frame, about 6:30. Okay, 5 minutes. And then it came down, rallied down into the open of the market. And then here you've got the opening of the market and price coming right back up into the price range. So the open of the market, value came right back in, price peaked, rolled down, right back up again. So you can see a large amount of selling volume coming in, prices rallying back up to the opening price. Is it going to continue or is it going to go down? Right now we can see that there's a lot of selling pressure at the open, but price is starting to pull right back into that. So like we showed you earlier, price will usually trade back up, test the prior values, test the opening values, and then it'll help you to see that. The purpling bars identify wide, more than 2 times average true range. So these purple bars identify twice average true range of the opening bars. It doesn't have to be opening bars. You can see that some news events or other things occur during the day that help to identify these. And so we call these wide bars, and they are significant enough to point out in most market setups. So we paint them purple to help you to see that. Okay. So using traditional trading strategies like stochastics or moving averages or MACDs, then you can see that there are specific decision points in the market that help you to see this looks like a short setup because I have a moving average bearish cross. You can see my stochastics have been overbought and are starting to come down. So you can see that these are also buy points. But at these points, okay, you have these decision points that you use in your trading. But if volume is already supporting the move in that direction, it's going to help you as a trader to take that trade with much more confidence. You have the edge. You've got the advantage coming into the trade because you know that sellers are already selling into this market. So when your signal comes here, or when your signal comes here, you already have 3 to 4 price bars lead into that trade, and it will help you. So that's 15, 30, 45. You've got a whole hour ahead of time where you already knew this market was starting to trend in that direction. And then now you're getting signals that say, I want to start looking at this short. Well, the market's already showing you that it's there. So it's going to help you to do that. And it's going to help you to trade it with confidence. Okay. Okay, Bank of America. It's not usable on Thinkorswim either. Although we do have TradingView, we do have NinjaTrader. If you have a TD Ameritrade account, you can set up and use your charts on that, and that's what I do. I have my accounts all set up on Thinkorswim, TD Ameritrade, but I trade them on NinjaTrader. Absolutely, TradingView is an awesome platform as well. Let me see if I can't get that put up here. Here's Hawkeye Tools on TradingView, where we're looking at the Hawkeye volume. I'm looking at Microsoft here on a daily chart, and you can see the just prior to the very large correction that we had into the market, that there was a lot of selling pressure. I mean, this is so obvious that you've got volume price extension, you've got pivot highs pointing and helping you to see that this direction is going to go down. So we're expecting at least 3 to 5 price bars of reversal coming from that. So when you see these price bars coming in, that gives you a really good indication that, number one, I've got to take profits out of this market, or number two, maybe I should start getting out of this trade, or three, if I want to protect any of my dividends or any payouts I've got coming up pretty soon, I need to start putting on some puts because this market looks like it's going to start correcting. Okay, so if you are using these crosses, you can see the crosses are lagged. They don't give you the signals right when you need. Even the moving average, MACDs are going to give you the message after it's occurred, not before. Volume is the only one that sits there and tells you before the action comes that the intent of the market is to move in a specific direction. All right, you wanted Walmart, okay. Walmart here, again, you can see we got a nice extension with the pivot high, so we're expecting 3 to 5 price bars following that. By the time we see the crossovers, you're already well into that trade. So volume is already signaling and showing that greater than average volume is starting to come in, and they were selling pressure coming into that. Now, Hawkeye just doesn't paint the price bar based upon the close, because that's what dumb volume does. It'll be green if the close is greater than the open. It'll be red if the close is less than the open. That's it. But we look at price volume, volume price analysis. So the price can be less than the open and still be green if we know and understand that we've got buyers, just like this price bar right here. If you can see price set up and you can understand that volume is less than the open on that green price bar, you've got price extension. That is a signal that the directional bias is to the upside. And if you understand volume and price together and you see a bar like that coming in, that helps you to see and know that, all right, this price action direction has failed and the market's starting to turn. And volume is the only one that's going to tell you that ahead of time. It gives you the edge. It gives you the idea that this market's turning. So with that, the market direction changed. Now you've broken the downtrend and you're starting to see a corrective move up. This doesn't mean the market's now going to trend and continue to go up. We've got to see volume support that. But we are starting to see that volume is starting to change, and that the downward selling pressure that did come in climaxed, and then now we're starting to see relief and build accumulation back into the market. JP Morgan, okay. All right, here you got a double top, double pivot. You can see that there wasn't a lot of selling coming up into JP Morgan ahead of the big correction. It wasn't until the day before that you actually started to see some selling off, but you did see a price failure and weakening. You did see a double top and a price action failure. So JP Morgan didn't give as many signs of the impending doom that the other markets did. BA, okay? I like Boeing. Okay, Boeing had a really big jump up prior to this corrective move. Probably had some earnings announcements, looked really nice. But on that type of earnings, I would expect to see huge amount of volume. And look what the volume was. It was white volume and very low buying volume. With that amount of activity, that is not real convincing that this market's going to go up. But Boeing put out such good numbers that even with the correction wasn't as pronounced as it was in any of the other markets. So yeah, you had a nice one-day healthy correction, then it bounced right back again. And you can see right here, the buyers started coming back in, nice pivot low to push that bar up, and you got a resumption of bullishness in this instrument. Okay, looks good. This is a nice chart. I like the way it looks. Yeah, Amazon, of course, is Amazon. Weakness. Price getting up into the highs, you start seeing the pivots paint off. You can see there's a lot of weakness in this market. But when price came right back down into these lows, very, very attractive to buyers. And you can see that after this bar closed, and we got a nice pivot low at that point, showing you that the huge amount of volume that came back in said there's bullishness in this market, there's bullishness in the stock, and the market is going to continue to rally back up. And right now it's come back up into pre-drop values already, and it looks like it's got plenty of room for continuation because we're starting to see a nice steady stream of high buying volume coming in, and we can see the continuing application of that as well. I'm glad someone brought up GE. GE's been so beat up, it's just like, okay, it's the poster child of come, let me show you how to beat someone up. Yeah, and that's General Electric, of course. You can see huge downward trends. Even the correction just, anyway, it's in a downward trend. But you can see for the first time in a long time, right here, volume is starting to accumulate. This is starting to become attractive to buyers, okay? You can see that the volume that they're coming, they're starting to establish long-term positions here. So I can see that these volume bars are now greater than average volume buying. When is the last time we saw that? Last time we saw that was right here, but it was a failed price attempt. Price pushed down and it failed, okay? And then that failed, and then price started to come down very quickly, okay? This looks like an exhaustion. Price stabilized, price attempted to come back up again. You got another push down, and then price starting to stabilize now. But this is the first time I'm starting to see some accumulation. Can't say the trend is over because it's not. You've got a nice established downtrend. You've had a couple of exhaustion setups. You're starting to see the signs of accumulation and distribution going on right now. So anytime you start to see red, green, white, red, green, white, when you start to see clusters of pivots pointing in that same area, that's when you know you've got accumulation distribution phase coming on. And if we see that broken, if we see it starting to break our moving averages, or if we can see that our MACDs are pointing in that direction, that will give us an indication that we're starting to see some bullishness out of this. So this might be a value play on General Electric if you're looking at this as a huge beat down position. Getting General Electric under $15 used to be, unheard of. So that's my take on General Electric. What's the meaning of a gray volume bar? These white, I call them white, but these are gray here. These are neutral volume. Basically, it's an equal distribution of buyers, equal distribution of sellers. So there's no real clear directional intent. It's kind of like neutral. It's not downward pointing or upward, it's sideways. So you just would expect to see white volume in regions of failure, of no demand, or in sideways price action. Okay, I think I've been keeping up with most of the questions here. This might be a good point to come back into my my presentation real quickly and make my special offer to you. And then I'll reserve the last 15 minutes for questions and answers and to go back over specific trade examples. It'll give you also some time to think about any other positions you want me to analyze, any other Forex, futures, stocks, or setups that you want me to look at. I want to say that the webinar offer I want to make you free today is for the Hawkeye Volume Starter Package. It's the software I've been showing you, I've been doing the analysis on in the markets right now. It's a 5-indicator pack. You get that with this offer. You get 1 full year of access into our private members area, okay, where you have access to all of our mentorship and all of our training videos and all of our training PDFs. You get access to our Wednesday live training room. You get access to our Thursday only members focused training mentorship class. You get access to the Hawkeye Inner Circle, which is our Skype chat room. You also get access to a 2-hour on-demand video training course where I specifically focus on using this volume starter package on the live edge of the market with standard indicators. No other, you don't have to buy anything else for volume to work. This just shows you how to use volume with other things like MACDs and moving averages and Bollingers and clouds and so forth. All right. So the value of this, we sell this in our store every day for $397. But today, part of our class and a special we did for Investor Inspirations is we can do one-time price of $97. There's no subscription fee associated with that. Nothing of the sort. So www.hawkeyetraders.com/starter, and in the chat box I'm going to put a link for that also, if you would like to click on that and go to the site. The site will give you the option to purchase that for TradeStation, NinjaTrader, or MetaTrader 4. If you're interested in the TradingView application, then you'll need to that's only available for subscription. And so let me see if I can pull that up again real quick. Yeah, so if you go to the Hawkeye Traders website under the store, under the subscription options here, then you can see that the starter package is available for $17 a month if you want to use it for the TradingView platform. But the other platforms are also available for $17 a month as well. But if instead of purchasing it, you can purchase the software. Like I said, we sell that every day for $397 for all the platforms as well. But you can get it today for $97 with that link that I gave you. So hawkeyetraders.com/starter, click on the link in the link, and you can get access to all this plus the bonus training video if you subscribe or sign up for that today. So what the volume package includes is the Hawkeye volume indicator. It gives the Hawkeye volume paint bar indicator. Okay, the volume is the price under, and I'll show you that really quick. Yeah, so the Hawkeye volume paint bar shows you the price action colored with the same color as the volume. So here's the volume, and then here is the price bars colored the same color as volume. So those are the volume paint bar. See the small dots that you see on the volume itself? That's the volume radar. So Hawkeye Volume Radar shows you specific volume events that we need to point out to you. So it's very high volume is yellow, ultra high volume is red, and ultra low volume is blue or aqua. So these are important. All three of these are important volume events that we try to point out to you and try to show you why they're important. Okay. And the other two are the Hawkeye Pivot. These are these small yellow dots that you see that are painted out. Hawkeye Pivots are extremely powerful tools that show conditions where are highly favorable for market reversals. And Hawkeye Wide Bar, that's the purple bar that shows when large market events or news events occur and you're trying to identify twice average true range values. So these are all part of the Hawkeye starter package. Okay, volume radar, volume paint bar, pivots, and wide bar. Okay. For $97. All right, real quick questions before we move on. Free upgrades, yeah, for NinjaTrader, and they're also available for NinjaTrader 8 as well. That's right. So you purchase the software, you get to use it in either Ninja 7 or Ninja 8. That's correct. Or both. The Brazilian markets, if you have data for Brazilian market, then absolutely Hawkeye tools will work for tools and stocks in the Brazilian market as well, Daniel. But you have to subscribe to Brazilian market data. Once you have the data, then Hawkeye will work on that. The wide bar is included, Chris, absolutely. How long is the special good for? When we look at the open of the platform, yeah, I'm looking for, it's 24 hours from today's class, so you've got access to this special for 24 hours, Bill. Lawrence would like to do a review of the Hawkeye Traders for Traders World Magazine. Awesome, I appreciate that. Oh yeah, I remember you. Yeah, we tried to set that up last year. Didn't quite follow through with it though. I'd love to, that'd be great. Can it be automated? Absolutely. We provide you also all the functions necessary to automate these for NinjaTrader, for TradingView, for TradeStation, even EAs for MetaTrader 4. Absolutely. You bet. All right, I've got about 5 minutes left, so I'm on any other market examples you want me to go through, that'll be great. I'll be glad to do that. The Hawkeye wide bar is the purple bar right here that shows the twice average true range. Anytime you see extreme volume in an extreme price range, then the bars will be painted purple to show you that. Okay, Euro Yen. Do some analysis on the Euro Yen, please. Okay, let me pop this over real quick just to see what we're looking at. Let's again look at longer. If we look at a daily Euro Yen, you can see consolidation. It tried to break out, but it's a really choppy. But right now we are on a weak trend right now of choppiness that's starting to show some signs of basing. And you can see based upon support that is a good reason. So this might still be in a region that might stay for quite some period of time. So looking at that from a 4-hour perspective, you can also see the huge amount of buying is supporting this level. So look for this to continue to stay here for quite some time. Hourly chart, you're starting to see it's basing, and we're starting to see this is attractive for buyers. This is an attractive buying area. So I would be looking for reversals or retracing back up into this value area that you see right back up in here. 30 minutes, so we can see that back down into our 30, 50, 15, 15, and 5. So 5 minute is the chart you trade from. This is just a little more difficult, but you can see weakness has come in, strength has come back in, strength has come back in, but that strength was broken. Now we've got a trend of weakness here. This is a difficult chart to trade. So trading the Euro Yen is not as easy as trading other ones like the Euro US dollar or the Australian dollar or even the Aussie Yen. So absolutely. All right, I've got about 2 more minutes left. So other markets that you want me to look at? Is this primarily for day traders? Absolutely not. Absolutely not. I mean, this is my bread and butter is trading these on longer term charts. So here you can see Microsoft on daily chart. This is daily volume where you've got weakness, selling, very, very attractive buying opportunities. Microsoft was already strong. You could see monthly and weekly charts are already trending up, but with that weakness, you knew there was going to be some trending come back in, but it fell right back in line. It didn't come out of the overall longer term trend, so this became a very, very attractive buy area. So setting up on daily, weekly, monthly charts is really, really beautiful. Okay. It doesn't have to be just for intraday day or day traders, absolutely. So these types of position trades, you set them up and you monitor them. I usually do it once a week, and it's usually on a Saturday. And after that, then you just you take off after that. Come back, monitor it once or twice a week, and then you're done. There's no monthly fee after purchasing the software unless you subscribe to the low-cost monthly payments. But if you purchase it on the special I gave you, there's no additional fees.